Hello, everyone. Welcome to our latest French Entree webinar, Moving to France as an American. I am Eva. I am your host and moderator today. It's such a pleasure to be joining you for a third time. We're joined by a fantastic panel of experts who'll guide you through everything you need to know about relocating to France. We're going to talk about property purchase, mortgage, visa, tax, financial considerations, currency exchange, renovation, and more. We're going to squeeze it all in an hour or so. And of course, we're here to answer all of your questions. Each speaker will present for about 5 to 10 minutes. We're going to be followed by a brief round of questions. Please do add your questions to the Q&A box at any time. We will take a few questions after each presenter, and then we'll have a dedicated Q&A at the end of the session as well. So please keep adding those as we go. I do have to let you know the webinar is being recorded, and you'll definitely receive a replay by email tomorrow. So, all right, guest panelists, please turn on your cameras and wave hello to our audience. This time around, we thought we would do something different, and we thought to incorporate a poll. So let's see. You're going to see a question pop up, actually 4 questions pop up, and we would love to hear and see your answers. Moving and buying in France. The first question is, when are you looking to buy in France? We want to see what you guys think. Second question is, where are you looking to buy? I'm definitely a Paris girl. That's my dream. I'm going to have a property there one day. I know it. Question number 3, why are you moving or purchasing in France? And question number 4, budgets. So let's have a look and see what everyone is saying. It looks like for question number 1, when are you looking to buy in France? It seems the biggest portion of you are still deciding. You're still deciding if France is right for you? Come on, guys. France is definitely right for you. A big majority of you are saying 12 to 18 months. Okay. Question number 2, where are you looking to buy? Southeast and Paris are fighting for first spot and unsure. Okay, it looks like maybe you guys need a few more trips to France to explore. Number 3, why are you moving or purchasing in France? Retiring definitely seems to be the top answer here. And what is your budget? Question number 4. It looks like the majority of you are saying between the 250,000 and 500,000 range. Well, thank you so much for participating in our poll. This definitely helps our panelists to give you more tailored information as well. And I'll share the results with everyone. And I think those will also be shared with you after the webinar as well. Now, let's get started with our first speaker. I'm sure you don't want to hear me anymore. Let's get right to it. Our first speaker will be Miranda with Paris Property Group. Miranda, over to you. Please introduce yourself and tell us about Paris.
Hi, everybody. I'm Miranda Junowicz. I started Paris Property Group 20 years ago, looking to help mostly American clients find great properties in Paris. I myself sort of navigated that process and found it very difficult, and realized I could be a real asset for other people looking for property. So I'm a lawyer by training in the US and fluent in French. And so kind of started that to facilitate other people's buying process. So I kind of thought I would come at this with a little bit of a perspective on what are the unexpected and quirky aspects of buying property in France. It is a pretty different system from what we're used to in the U.S. And what's nice about it is that unlike in the U.S., where we have sort of different systems and processes for different parts of the country, France is really there's sort of one way to do it. There's only one kind of process of buying real estate. So I specialize in Paris, but this applies to properties you would buy anywhere in France. So what is weird or unexpected about the system? So the first and kind of the most talked about aspect is that there's no MLS in Paris, so that there's no sort of consolidated database of real estate offerings to go look at. There's about a dozen different websites to look for property. 20% of properties are for sale by owner and sell directly from the owner. It also means that because there's kind of not that MLS style offering, that many sellers who do choose to sell through an agency will list with a number of different agencies, maybe or 2 or 3 different agencies, because no one agency can say, I'll get you all the buyers. And so sometimes that will mean a different commission rate, maybe even a different listing price. So you'll sometimes see the same property listed by different agents on even the same website. For this reason, because they are kind of not secure in their relationship with these sellers, most of the time addresses are going to be hidden. So you're not going to see the exact address. You'll see a neighborhood or an area. If you're outside of Paris, you might just see the name of the town, but you're not going to get an address for the property. And that means you're going to have to inquire and get in touch with that individual agent in order to both see and even learn where the property is. Another interesting aspect is that the listing price you see is a little bit different than what we have in the US. So I also do real estate in the Silicon Valley area in California, and we have a very kind of competitive market for buyers. So we often will entertain multiple listings, meaning more than one buyer offering on a property and upbidding the listing price. You can think of the listing price in the US as being an offer to bring offers. And in France, the listing price is actually a binding offer to sell. So what that means is if you offer the asking price, then you get the property. So it makes it a little bit easier, and it makes speed kind of a different relationship. So if you see something amazing and it's at a really great price, you want to act quickly. And if you really want to secure it for yourself, sort of you can come in at asking price and lock in the property. I write no lowball offers, not because you can't bring one, but because culturally it's seen as a little bit different. You wouldn't really come in blindly with a really low offer. You would talk to the other agent, and that can sometimes be seen as almost offensive by the seller. They won't even counter you. So being sort of aware of those cultural differences is important to make sure that your offer is successful and you're kind of getting to a negotiated price, but in a way that feels respectful for the seller as well. And last is that the listing agent fee is included in the public listing price. So you don't have to add that on. In France, the role of a buyer's agent, which is what we often play and sort of where we started our business, is more and more accepted, but it is not an integral part of the transaction process. So most transactions happen without a buyer's agent, where the buyer is not really represented, and the listing agent, of course, represents the seller, but the buyer will come in and kind of do their own work to secure the property. So the role of a buyer's agent is very helpful, I think. I think we do a really good job along the way for the clients. You don't have to have one. And a buyer's agent fee in most cases will be on top of the listing agent fee, because kind of there's no culture of really commission sharing. So what you see though in the price is does include the listing agent's commission. So how does the deal go down? Again, sort of referring to US experience, we often will have our offer accepted. We go into contract, and about a month later, you're closing on the deal, even if you are financing the deal. In France, that is not the speed of business. It's much longer. So your offer is accepted. It takes about 30 days to get to signing a promesse de vente. That is the preliminary sales agreement. And this is done in front of a notaire. A notaire is really a government official who oversees the transaction process, collecting taxes on behalf of the government, checking title, running escrow through their accounts. You can have your own notaire, and the seller can have their own notaire. There is a fixed set fee, a government set fee that is split between them in that case, or just goes to one notaire if there's one notaire. So they're not your lawyer, but having your own notaire is definitely advisable. Somebody who is looking out for your interests, at least. An English-speaking notaire is advisable if you don't speak French. They really are able to help you navigate a number of different aspects of the purchase, and we'll go over a couple of them. But that promesse de vente happens in front of the notaire. It takes about a month to get there. They do a lot of the verifications about the property and about the parties before you get to that preliminary signing. So there's a month between your offer being accepted and you actually signing a contract to purchase the property. Once you do, you get another 10 days. If you change your mind, you can pull out. The seller cannot pull out. Promesse de vente actually means promise to sell. So this is the seller promising you that they are going to sell you the property. You have not promised to buy it. You've promised nothing. You've just come to the deal. You've put, by the end of your 10-day period, you will have to put 10% of the purchase price down. And if you pull out after that 10 days for no reason or without a contingency, you'll lose the 10%. But that is your whole obligation. You're not required to move forward with the purchase. You have your 10 days. Now, if you're going to finance, usually the acte de vente is going to take about 2 to 3 months to get there. There's a much longer mortgage process than there is in the US. And at about 2 to 3 months later, you get to crack the champagne and you own a property. And the one kind of thing that has changed in the last couple of years, if you are a cash buyer, you actually can skip the promesse de vente and you can go straight to signing the final act if you are not taking out a loan. So there is a way to shortcut the process, but this is the very usual process. I would say for many of our clients, because they're looking to renovate or furnish or kind of looking at the property as something they want to improve, this 2 to 3 month window can be really helpful, bringing in contractors, looking at what's possible, making decisions about styling and how you want to do it. You kind of get this nice window to do that before you're, making mortgage payments or putting all the money in. Couple things to think about that are different for us. Ownership structure in the US, you can buy a property and then move it into a trust. You can rearrange who owns it. In France, that's very, very difficult and costly to do that. So you really want to make those choices before you close. There's even forced heirship laws. You can choose to apply your US inheritance law, but you need to do that beforehand. You can structure in a company that allows you to pass ownership to children, basically tax-free. All of these decisions need to be made before you close on the property. If you make these changes afterwards, you are going to be subject to additional closing fees. So what are those closing fees? They're about 6.5% to 7.5%. Now, even they're sort of more 7% to 8% of the purchase price. Most of that is taxes, about 5.5%. These are often called notaire fees, but this is not the notaire's fee. Their fees about 1% of that 7% to 8%. So it's a pretty big chunk. And actually, that's that 1% to 3% should be down below. But in the U.S., you'd probably have a few $1,000, actually much less, and you don't have closing taxes. So how does that work out for you long term in France? Particularly in Paris, your property tax is about 0.1% to 0.2% a year, compared with the U.S. about 1% to 3% a year. Your building fees, your HOAs in the building are very, very low, a couple €100 a month, compared to a similar size condo in New York would be about $1,000 a month. So low HOAs and low utilities, at least internet and television. An entire TV, phone, internet package is about €40 a month. I know that my cable bill is much higher than that. So you kind of get it back on the back end. Paris or France is not really a place where you're going to flip property in most cases. You have very high entry fees, very high taxes to get in, but then it over the years really balances out in your favor. real quick, and we have an expert on renovations, but in Paris in particular, as long as you're staying within the walls of your apartment, you're not trying to do anything on the outside, and you're not touching any supporting beams, you don't need any permits, which is, especially in California, quite unusual. You have long-term ownership, again, is very favored in France. After 22 years, you pay zero capital gains. You pay zero any taxes at all after 30 years of ownership. And you have a nice 15% automatic increase in your basis if you choose to sell anytime after 5 years. So there's some capital gains tax forgiveness there. Whatever you pay or don't pay in France, of course, you still have to talk with your U.S. accountant how that works out. But that is a nice change. There's long-term ownership, no capital gains at the end of 22 years. So that's kind of the system. And I was just hoping to give everybody, I know not everybody here is interested in Paris, so hopefully that gives you a sense of how the French system works. And we'll just look a little bit at some of the Paris numbers and what's going on with our market. This is a map of Paris. Everything in red near the Seine is the most expensive areas of the city. Saint-Germain-des-Prés and the Marais, these are also very, very favored by U.S. buyers, by sort of international buyers. Of all of Paris, 8% of the buyers in Paris last year were non-French citizens. Of those, 25% were American. So a lot of American interest in Paris, a lot of both from moving to Paris and pied-à-terre buyers with an average budget of 715,000 euros. And then, what can you get in Paris? A few different property options. There's the beautiful classic Parisian apartment. This is a client of ours who bought all of these, actually are clients of ours or properties that we've facilitated purchase. So a classic Paris apartment kind of has all the features, the wood floors and the beautiful moldings and the windows and the lovely views. These in the most coveted areas of Paris and really all throughout, just the beautiful features that really speak Paris to us. Some of these can be short-term rentals. These are very special properties that have a permit that passes from the seller to the buyer. So once you have the permit, it's yours. They have increased resistance to Airbnb, like many major cities in the world. And so they're not giving out any of these permits anymore. But if an apartment has one, it travels with the apartment. And because these are more and more limited, they can be a pretty lucrative option. So you can have sort of between anywhere from a 6 to 8% annual return if you can find an apartment with one of these permits. And then last is fractional ownership. This is a lower budget but nice option for a lot of people who want the bigger apartment. Rentals are restricted. How do you get value out of this market? Fractional ownership is an option. This was actually my first apartment in Paris that we turned into a fractional back in 2008 and have a lovely and very happy group of owners. This one is in the Marais. This apartment is another fractional ownership, and we actually have one that we're developing at the moment, a beautiful 3-bed, 2-bath in Saint-Germain-des-Prés. So happy to talk to anybody about that as well. And I think that's it. I have a guide to Paris real estate. If you want to have me send it to you, I'm happy to do that. You can just email me at that address and visit us on the web, and happy to chat with anybody and answer any questions.
Thank you, Miranda. That was so helpful. I can just picture myself in the classic Parisian apartment having a croissant.
Yeah.
It was lovely. One of the questions for you was to go over the timeline from offer to closing and the major milestones, but I do believe you did cover that in your slides already. Another question was, how about bypassing the listing agents and dealing directly with the sellers? Would that work? Is that common?
So it does work. I think I mentioned that about 20% of deals happen without an agency. There's even a paper called Particulier à Particulier online. It's called pap.fr. I'm not sure if they have an English version, but they might. And I also believe that Se Loger is another major outlet for properties. I think they've started to do a for sale by owner option so people can list their properties privately. A couple of things to note. There is no requirement that they keep their listing price what it is if you're working without a listing agent. So that's just something to be aware of. And, there's nothing stopping you from doing that. Again, listing agents will protect themselves by not providing you with the real address. They might make you sign something before they go and show you a property, but it's because that's kind of well known that French people will go with the listing agent, visit a property, say thank you so much, go around the corner, and then come back and try and deal directly with the seller. So it does happen just like in the US, you don't need a real estate agent to buy or sell a property. You can absolutely go directly. Yeah.
And one more question. How long does it typically take to find the property in Paris once you're ready? Can we just be on vacation and expect to see a property tomorrow? Or how far ahead do we need to plan?
Well, if you're working with our team, we plan, it's a pretty big job to find the properties from all these different resources, schedule the visits, do the follow-up and the diligence on the property. So we start with our clients about 3 or 4 weeks in advance. We have clients who come into town anywhere from a couple of days to a week or 2 weeks. We line up, everything we've selected beforehand, anything that's coming on during the time we're there. And the hope is that we're finding you something great while you're there. We're doing, anywhere to 10 visits a day, really trying to get in and see lots of different properties and make a great selection. So, yeah.
Wonderful. Thank you so much, Miranda. And to the attendees, if you have more questions for Miranda, please do put them in the Q&A box, and then we'll have more time towards the end. But now we'll move on to our next speaker. We have Tom Easdown with French Plans, Meridian Gray. And Tom, over to you. Please to introduce yourself.
Hi, everyone. As Eva said, my name is Tom Easdown. I am Managing Director of French Plans, which is an architects and planning consultancy here in France, and founder of Meridian Gray. They're two property consultancies, I guess is the best way to describe them. Meridian Gray operates on the pre-purchase side of the property transaction, and French Plans majoritively operates on the post-purchase side of the property transaction, where our clients have finally bought the property and are looking to develop, renovate the houses that they have bought. What I'm going to be talking today about generally is this idea of property intelligence. And what I mean by property intelligence is this concept of gathering as much information about a property as early in the process of your search as possible. And what things you can be starting to think about when you're viewing properties that might just kind of tweak the brain, just kind of go, oh, maybe I need to look into that a bit further. So France has a huge opportunity for French properties. There is an exceptional quality and variety of buildings and homes in France, and regionally there are a huge number of underused and lightly modernized properties that are available to international buyers, especially US market, for renovation, and for you to adapt to become the home that the idea of your dream lifestyle, that you can mold that home to your needs. Most of the properties we work with, we find have excellent fundamentals. And what I mean by these fundamentals is a really solid vernacular materiality, whether that be stone and wood with tiles, or timber, or anything that really gives it a certain kind of structure. The proportions of the buildings are usually pretty good. The space that's available, the volumes that are available in that property, the lights, but also the setting in the building is often a really key thing that actually you struggle to replicate if you were trying to rebuild that building or build new. And when we're thinking about the opportunities that the buildings present, we have to gather as much information about those opportunities as we can, because effectively if that equals 75% of the building and you're adding the 25%, the 25% we're adding, we know the idea you want. The 75% at the moment when you're purchasing them is unknown. And so this idea of intelligent restoration, we're going to take what is the unknown, the bit that is the existing building, find out as much about that as possible so that we can mitigate the risks and eliminate any of the major surprises as we work through any renovation projects. And whether that be a major renovation, significant bar conversion, or maybe it's just a minor renovation of a kitchen refit in a Parisian apartment, the ideas of finding out as much information as you can about a property still apply. So when we work with clients, we talk about looking at property and balancing, identifying risks against understanding the opportunities of the property. Quite often, clients will come to us and they have no interest in developing outbuildings or dilapidated buildings and structures on site that they might see as a burden. They might think, I don't want to have to pay to develop those. I don't want to have to pay to maintain them. It's a risk I don't want to take on. Whereas if we look at it from the other side of the coin, those buildings might present a great opportunity for either increasing the living space in the buildings or increasing your rental yield if you're looking to rent out that property either short term or long term. Looking at that, if we do then turn that risk into an opportunity, we also have to balance that opportunity in that it does create its own risks, whether that be regulatory risks or structural risks. And that's where balancing the technical realities of what's there with the aspirations of our clients, we kind of come up with creative solutions. And that's where kind of the best of both worlds comes in. You see absolutely fantastic French properties that really are a marriage of the existing historic buildings with the insertion of modern living and modern aesthetics. So what are the main risks? This is kind of what we talk to our clients first when they're started to look at properties for the first time. Now, the French property process, the purchase process, the market is the same as any market internationally, really, in its principle of caveat emptorum, buyer beware exists. In that, it is your responsibility to make sure the building that you're buying, the home you're buying, is fit for your needs. But unlike in the US, there isn't the automatic set of professionals mandated to you as a buyer as soon as you're making an offer to undertake your due diligence for you to make sure that property is going to work for your needs. One of the main risks we have to deal with our clients is that they assume that the French process works in the same way that the American process does, or the Australian process, or wherever they're coming from in the world. And we have to kind of educate them to say, no, that's not how it works. It is entirely possible to buy a French house without having any professional input on your side of the contract at all. You will obviously talk to the notaire, and they will develop the concret de vol, or promise de vol, which will be fair to both parties. But the notaire isn't necessarily going to make sure the building is working for you, and that the regulatory environment for the building is working for you. So it's important to understand these things, and that if you need some guidance or some special attention paid to a building, that you need to go out and find that professional to do that for you early on in the process. Structural risk we kind of all know about. I mean, that's a big one. As was said in the previous, Miranda said that the surveys aren't really a cultural thing in France. They're not culturally done. It's not a normal thing to undertake a survey in France. But we always advise that if a building is of a certain age, if it's been there around a while, or if your plans for the building are to develop it, understanding the building and whether it has a good roof structure, whether it's been affected by water ingress, whether it's likely to have moved due to subsidence, is important to understand so that you can plan for it and budget for it in your future works. It's nothing worse than planning, having a budget for a renovation being blown out of the water because you get up into the roof and discover that actually your entire roof structure needs replacing. It's a big line that you need to take out of your end budget. So understanding the structural risk of the building is important. Regulatory risk is also an issue. Understanding the planning position of the planning regulation position of the building is key to future development works. It's also key to understanding the risk of any potential works that have been done to the building outside of regulation that you might accidentally adopt, and therefore prevent any future works being undertaken. So understanding what planning zone the building comes under, what those planning regulations say, and what limits it puts upon the property really is key to one, understanding the feasibility of your plans, but also understanding that what's been done is legal and can be built upon, and you're not adopting any risk that's going to bite you later on in the process. The contract can actually, or oddly, present a bit of a risk in that it's signed quite early on in the property purchase process, and essentially we always advise people to try and do all their due diligence before they're signing the promised avant, the compromis avant, because the way the compromis works is that you can insert clauses into the compromis if you haven't quite finished all of your due diligence, or is there something you want to test with planning that means you can undertake that testing and that work during the contract phase. So the compromis isn't a fixed template. It's something you can have input into, but if you're not aware of that, it can present a risk because you will sign it quite early on in the process, and it binds you into a contract. If you're bound into a contract for a house that isn't going to work for you, it could be a problem later on. So understanding what that is and how that works is important. Cost risk is also obviously an important one to understand, and understanding what the budgeting and cost processes are going through the purchase are important, and make that all of the other risks kind of feed into that bottom line risk, so that we can take out those surprises which are going to cost money in the future. So what are we talking about in terms of the amount of knowledge, and what things do we give to our clients and say to our client they need to be thinking about when they're first looking at projects? And these are the things we first think about when we're looking at houses that clients bring to us with ideas. Is what's the structure and condition of the property? Does it need a survey? Do I think it's, is there something particular on the surveyor to look at? Is there anything worrying in when I'm looking at a property that I need to further investigation over? One thing to note is that when you approach an agent and possibly it gets to offer stage, you'll be handed a wad of statutory reports, diagnostic reports, which go into a whole range of information about the geo risks of the property, so whether there's risk of subsidence or flood, the presence of asbestos, lead, the electrical systems, the drainage systems. There's a whole range of things, but they're surface level assessments. They're not in-depth surveys of the building. The geo-risk report will tell you if there's a risk of subsidence, but it won't tell you if the building has suffered from some subsidence. So it's important it's an important tool in that it can highlight where you want to go further with your investigation, but it's not a full structural survey. The regulatory status of the building is also important, as we said, because it's important to not necessarily fall in love with a building and think that you are going to be able to develop it without understanding if the planning regulations in place for the property allow you to do so. Nothing worse than bringing a building to me once you'd bought it, saying it's great, we're going to convert the barn that's attached, and me turn around and go, actually, planning regs say you're not going to be able to convert the barn that's attached. Puts a bit of a dampener on the excitement of the property purchase. That kind of goes hand in hand with design feasibility. Can the ideas I have for the property be implemented? And that kind of feeds into structural condition and regulation. And then all of those three go, right, how much have I got to spend on the property? So my budget for the purchase, my budget for the renovation and improvement. Do all of these things, tick the box. Am I going to be able to afford it at the end? The number of projects we see, unfortunately, over time fail because budgets run out because the early work wasn't done is quite astonishing. When if the clients had done enough work early on to anticipate some of the issues that have come up, they might have not had to pause or fundamentally change their plans for the projects. So we work with our clients early on in the process when they work with us to develop a vision for the property and their lifestyle in France, because the way you want to live your life in France goes hand in glove with the house you want to live in. It's in, right? So it's important to go through with you the way you want to live, how you see your day-to-day life running, so that enable you to develop a set of parameters and a set of kind of tick lists, checklists to be going to look at properties that we can work with you to say, okay, well, you want to be in a village, you don't want to be out of town, you don't really want heavy renovation, so we're not looking at barn conversion, that kind of thing. It really gets kind of to the core of why you're moving to France, where you want to be, that kind of thing. What to budget for? We talk about what reports to commission and what we're thinking about in terms of that. essentially, we want to give you a toolkit to be able to move forward with confidence in your purchase, to know that once you've signed on the dotted line and you sign the active button, got keys, you can embark on your grand project with a good amount of confidence that that project is going to come to fruition successfully, and you're going to be able to live the dream life you're having of France completely successfully. We've got a ton of information on the purchase process and various other things on the website, French Plans. There's also a lot of blog information and guides on the Relocating website. So check both of those out. If you want to book a business session or want to have a chat about the purchase process or anything that I've whipped through in the past 10 minutes, please let me know. But yeah, that's a whistle-stop tour of due diligence and pre-purchase kind of reporting.
Better to be safe than sorry. Thank you so much, Tom. That was really, really good information. A few questions for you. One of our attendees messaged saying, are you saying there's no requirement for an inspection of the property by a licensed professional before you sign the contract?
There's no requirement, no. No, there's no legal requirements to have an inspection done. You can, and lots of properties are sold without any kind of inspection undertaking.
So definitely different than what we're used to here in the US. And then another question is, Tom, would your firm be a good point of contact if we're looking for a duplex new build?
Not necessarily. It depends on where you want to be. If you want to build a new build yourself, then yes, absolutely. But we don't necessarily get involved with the developer side of things. We do have developer contacts, but it's more on the design and the design and construction phase of that process.
Okay, wonderful. Thank you, Tom.
Okay.
If you have more questions for Tom, keep putting them in the Q&A, and then we'll address them towards the end of the webinar. And now we will jump over to our next speaker. We have Thomas Nivert with Société du Courtage. Thomas, are you there?
Yes, I am.
Hello, welcome.
Okay, thank you very much. So, pleased to meet you, and thank you very much, FrenchEntrée, to organize those late evening webinars that give us an opportunity to finish some homework, I will say, and that's always nice. Société de Courtage is it's a mortgage company dedicated to international buyers. So we are really focused on this particular segment. We deal only with non-resident, which means French expats worldwide, as well as a very large pool of international buyers, whichever nationality and country of residence. So a little bit about who we are and where we come from. So we are more or less, we are a family company. We operate today with a little bit more than 10 people. We created the company 10 years ago when we were expats ourselves, realizing that there is a need for guiding people getting a mortgage, as the process in France is relatively tough. So we created this agency. We are really customer focused. We really want to bring an awareness level and to really educate the people along the way about the process and what it is. So there should be no frustration. It should be as transparent as possible. So then we make the overall experience better. We are probably among the biggest agency in France, which is dealing with foreign buyers. So we are very happy with it and hope it will continue. So just to continue with Miranda's presentation, effectively, the French market is recovering a little bit. We are expecting to close at 950K transaction. To give you an idea, when the market will pass over this 1 million transaction a year, it means that the market will be back into this kind of a pre-COVID era, which is a good speed. Still, the prices are not really recovering. We are in kind of market that is a lot of wait and see, and not much is happening. Parisian market is still down. There is still very good bargains to do, but we see that So the price is not going down further. There is a kind of stabilization from 1 or 2 years ago, which is quite nice. From the interest rate, and this will probably of the interest of many. In France, the interest rate is relatively cheaper compared to other countries. So as a reference, you can have in mind that the interest rate in France is somewhere 3 to 4% for a 20 years loan, which I'm sure you will appreciate. It's relatively cheap. Where the people are buying. So the people are buying mostly, if you can see here, in the south of France, where the climate is nicer, and of course in Paris. These are the two clusters where foreigners are buying. And yes, it's true that Americans in some parts of Paris, it's 1/3, if not 50% of buyers, which is really, changing and modernizing the way that Paris is moving, which is really nice. So for 2026, we expect more or less the market to be flat. We have presidential election in 27, so we believe that until the election, not much will happen. I think it's what is helping us as a mortgage broker is the performance of the market. As you know, the stock, and particularly in US, is performing very well. So as a finance person, when the stock is performing well, that gives us some additional leverage to finance a property, for example. We see, and this is important, we see that many foreigners tend to sell some stock or sell some position to buy a house. Well, it's not needed. You can instead remain invested and still avail a leverage by having a local mortgage loan. And you see below what are the difference in terms of rates. So the best of the two worlds is really to remain invested in the US and leverage locally at a low interest rate. Okay, that's the best of the two worlds, if I can say. Then what is important is, as a foreigner and as a US buyer, by law, you are eligible to a bank loan. Okay, so this is applicable to any bank with any lenders. So this is the law. Still, the reality, unfortunately, is that retail banks are not necessarily trained, nor capable or willing to really handle your application. So they may be excited to receive you and talk to you, but then the situation is that your file is likely to remain on the desk because they don't know how to process it. For example, your tax return in the US, it's really particular. So we need to know which numbers and figures to go and get into these documents, for example. So this is where the value of having a broker in between is that we make sure that we process your application, your papers, and process them into a digestible, understandable format for the bank. Also, quite interestingly, what we noticed is in the US, in the UK, the banks or lenders will pay a lot of attention to the asset, the return, and so on, what you buy in effect. And I think it's important also to understand that in France, the banks will eventually pay less interest to what you are buying and at what price you are buying it. And the banks will be fully on you to look at your revenue, your income, how consistent you are, and all those kind of things. So even if this credit card score doesn't really apply here, the bank will go into the detail of your bank statements and so on to see and understand your behavior as a person who is saving money or how you spend your money. So that's an interesting difference between the two countries. So who can buy? Who can buy? Pretty much everybody. You can be single, you can be married, you can be active or retired. We have many people who are approaching retirement. They are buying it just to enjoy it. We also have people who are just buying it for holiday and with no intention to keep it on the long term. There is no age limit, even if banks likes that the loan be repaid on or before your 75th anniversary. But there is ways to compensate it, I would say. And then you can buy it under your own name, which we advertise, we recommend, or under like a trust. It's called an SCI in France, slightly different. And then what can you buy? So you can buy new built. We can finance renovation work to some extent, up to 20% of the property price. And then how? So we still need to show that you have the revenue and you can sustain yourself by paying back the loan as well as having sufficient money to sustain your daily life. I think it's just to show you, as I mentioned before, there is in France a low interest rate. It's low compared to UK or US, but it's even low within Europe. So, for example, this chart is showing you the gap in average for a 20 years loan over a long period. So you can see that there is always a gap of 1 or 2% between the US and France, which makes it quite very economic. Okay, if you borrow 200,000 or 5 or 2 million, it makes a big difference in the price of the loan. You can see here, for example, out of a 1 million euro at 3% and 6%, you can look at the total interest, okay, which is really significant. And of course, the monthly repayment that will go from 5,500 to 7,100. So the impact of leveraging on low interest is really, really significant. On this account, we developed a couple of simulation by taking a couple of projects. Here it's a 350K where we could finance it at 70%. You bring a collateral to the bank at 20%, and you end up with a monthly payment of 2%. We made also so few more. This one is on 2.5 millions. And here, for example, among the three way to finance a property, you can see that the option B would enable to be really, really saving in terms of cash flow. So this is a kind of efficiency that we bring, that we develop together, and that we bring you in order that you make a purchase property in France, which is most of the time for a pleasure. So the financing could be also effective and really efficient. So this is a lot of our focus is into this direction. How does it work? So Miranda has explained already a little bit about the notaire and the acquisition process. For us dealing with international customers, we developed a remote and digital process. Still, it's very human. We have designed a process where you get assigned with a project manager from day one. And so we go through 4 different steps, where first we understand your project and we define what is the eligibility and to how much capital you are eligible for. And then we go into this due diligence, making sure that all your papers are in order and everything is fulfilling the conformity of the bank. And then there is, of course, a back and forth negotiation with the bank on the negotiation, the amount, the collateral, which kind of guarantees, and so on. And at least when everything is aligned, then we have the addition of the mortgage loan and the release of the fund. So all in all, as we said earlier, the process is relatively long. You can consider effectively 3 to 4 months from the step 1 to the end of the step 4, which is long. So France is not US, it's not UK, it's France. This process was started in a way, this land department was started by Napoleon 2 centuries ago. So somehow we pay a little bit of this every day. Still, I must say that there is a lot of time and legal time where it's working for you, because there is still some audits made, diagnostic for heavy metals, for different kind of things which are here at the end of the day to protect you. And having such a strong land department, for example, in France, there is no risk that you buy the property and that the seller is not the effective owner of the property, right? So those kind of things may happen in many countries, but not in France. So it's longer, but there is also benefits into that. So for the one who are interested to see and know more about what are the financial strategies, we developed a series of simulation that you can access and download by using this QR code. And then for the one who are thinking or starting the project, we offer you to have a free call, 30 minutes with my team in order to have a first overview of your project and feasibility, and then to give you some high-level numbers in order to guide you into the process. All right. Thank you very much.
Thank you so much, Thomas. That was really helpful. There were several questions in the Q&A asking about the age, if there's any age restrictions, any limits. A lot of mentions that they believe it's quite hard for retirees to obtain a mortgage. Can you just reconfirm this for all of us?
Yes, it's a very good one. It's very important. So there is a rule, but it's not really a rule. There is a guidance that the loan should be repaid on or before your 75th anniversary. But having said that, there is different type of mortgage that can be made to counter this, or there is different way that we build more collateral or guarantee to the bank in order that we cover this risk. So in essence, it can be countered, but it will cost you more. Okay, so it's not a deal stopper in any case.
Okay, thank you so much for confirming that. And then one more question says, I have read it is not easy to get pre-approved to understand what our full budget will be, as we would normally do here in the US. Is that correct?
It's absolutely correct. And it's absolutely correct. And it's a kind of strange things in France, in a sense that us as a mortgage broker, we are able to tell you in advance what are you eligible in terms of amount, capital, and conditions. Still, it's not really binding because we are not the bank, but we do it every day, so we know, right? But it's true that there is countries where you get the approval from the bank first, and with this document in hand, you go to the market to find the property. Here it's the reverse. So the bank wait for you to have selected and signed, so this pre-contract, give it, and then the bank will look at it if she agrees to finance it or not. So again, a way it's not a very efficient process. So have some time in front of you. Finding the property may be quick, quite often, but effectively getting the finance done is sometimes time consuming.
Perfect. Thank you so much, Thomas. That was wonderful information. We will move over to our next speaker. We have Kelly Cutchin with Moneycorp. Hi, Kelly.
Hi, good afternoon, everyone. Thank you so much for having me. I'm going to jump right in. I'll fly through a few slides and hopefully try to teach you everything that you need to know about currency exchange in 5 to 10 minutes. But my name is Kelly Cutchin. I am the country manager for Moneycorp here in the US. Moneycorp specializes in currency exchange and international money transfers. Moneycorp is a UK-based company. We've been dealing in foreign currency exchange since the late 1970s. And last year, we traded over $100 billion worth of foreign currencies in over 120 different currency pairs. We do have offices in 11 different countries, but not to worry, you don't need to visit us in person, although once you are living in Paris or in France in general, I'd love to visit you. But everything that you do with Moneycorp will be done online or over the phone. There's not many industries that are as regulated as a foreign currency exchange industry. So it is important for you to understand that we have been doing this a long time. So we take regulations and compliance very, very seriously. Again, just a map of where our concentration of offices are. So we see we're here in the US and Canada, so we've got North America covered. And there are other biggest concentration of offices is over in Europe and in the UK. I do invite you to visit our website. Should you wish to establish an account with Moneycorp, you can do that right there. It's about a 5-minute process. It's pretty painless, but you can also find additional information on different currency pairs and also subscribe to our different market updates and blogs. There's other interesting articles there as well, so you can read further about sending money to France, some guidance on opening a French bank account, and even some other checklists and things as you're trying to do your research to move ahead with a purchase in France. There's also overseas property guides. I always think it's funny, people kind of start with a checklist, and that checklist might have 10 things on it, and instead of checking off the boxes and that list getting shorter, sometimes the list has to get longer at first because there's things that you don't even know that you need to be looking into. So feel free to check out those overseas property guides and just make sure that you're asking all of the necessary questions to the experts prior to making any purchases. On my presentation today, I'm obviously going to focus on real estate specifically and buying property in France, but do know that our services can be utilized for a wide variety of reasons. We have many clients, of course, that are looking to purchase property or emigrate, but also our services are great for sending children to study abroad, receiving inheritance. We do deal with both private individuals as well as corporations as well. But again, for the sake of this presentation, we'll keep it to real estate. So the number one question I'm often asked is, why would I use a service like Moneycorp versus just going through my bank? And it's a great question, but it's a pretty easy question to answer as well. Banks typically charge international transfer fees. It's not a huge fee in the grand scheme of things, but US banks are typically charging a fee of anywhere from $25 to $75 in order to facilitate an international transfer. Moneycorp never charges any transfer fees. Whether you're making one payment directly to a notaire or you're sending hundreds of payments internationally, again, Moneycorp will never charge you a fee. But more importantly, it's the exchange rate itself. There's something known as the interbank rate of exchange, and this is the true and actual rate of exchange that big banks are buying and selling billions of dollars of currency at any moment in time. However, the banks are then selling the currency to you at a markup or a margin. Unfortunately, the U.S. takes this to the highest degree, and banks in the U.S. are typically taking a margin of anywhere from 3%, but we've certainly dealt with clients that have compared us with their banks to find out that the bank was taking a 5%, 7%, and dare I say, even a 10% margin on the exchange rate. Moneycorp makes our profit exactly the same way as the banks. However, when the banks are taking those 3, 5, 7% margins, Moneycorp works off of a less than 1% margin. So we're going to work with you to help make sure that you're getting as close to the true and actual rate of exchange. Again, Moneycorp has access to that interbank rate of exchange because of the volume and transactions that we do annually, and we roll that cost savings onto our customers. Every single customer that establishes an account with Moneycorp, we automatically introduce you directly to a currency exchange specialist. You will have the same person to speak to throughout your journey, even if you're 6 months, 12 months, 18 months away from actually making a purchase. It's a great time to start that discussion with your currency dealer. One thing is for sure, the exchange rate is going to fluctuate between now and the time that you actually want to make a transfer. So it's great to have someone advocating for you, watching the market on your behalf, helping you to target a specific rate of exchange, and always at the end of the phone to answer any questions that you have. We can, again, help you target a rate of exchange that's perhaps better than what's available today. That way you may be inclined to pre-purchase your euros, even if you don't need immediate access to them. And Moneycorp also has the ability to lock into an exchange rate for up to 2 years. Again, your currency specialist can go into a lot of details with you to determine if a forward contract is the right thing for you. So how it works, first and foremost, you're going to set up an account with Moneycorp. It's free to do, places you under no obligation to use our services, and there is no need to pre-fund or put any deposit into the account. You'll speak to your currency dealer throughout this journey, and when you're ready, you'll agree an exchange rate. At that point, you would transfer your US dollar or Canadian dollars. I think I saw a couple Canadians on the webinar today, so thank you for joining. You'll transfer your local currency into your Moneycorp account. We do have local settlement accounts, so this means, again, you will no longer be faced with having to do an international transfer. US dollars will come into our US dollar local settlement account. We will do the conversion into euros at the rate that you pre-agreed with your currency specialist. So again, there's no surprises. And when you're ready, you simply instruct Moneycorp where you need those euros sent to. Again, bearing in mind that we can, of course, facilitate a transfer directly to a notaire, directly to your personal French bank account, or directly to anywhere else that you need those euros ultimately to arrive. Here's the fun part. We have Emily here. Emily is from the US and she's buying a property in France. Don't ask me where I got the name Emily from there. But Emily is buying a property in France for 500,000 euros. And I just wanted to show you a quick comparison because this is usually when people go, ooh, all right, now I understand. So what we found on October 14th is Moneycorp was offering an exchange rate of dollars to euros, ballpark around 1.16. So it was costing an American client $1.16 in order to obtain €1. Simultaneously, compared with a US bank, the bank was offering a rate of 1.18. So you may look at 1.16 and 1.18 and not think it's a dramatic difference, but look at the cost savings there. Moneycorp was able to save Emily $10,000 on this transaction just simply because of the margin that we were able to provide on the exchange rate. So this type of savings is very common and something that you definitely want to make sure that you're getting the best rate of exchange when you are converting your dollars. Again, no international transfer fees. You'll be notified when funds arrive at Moneycorp, and we will also provide you with wire transfer confirmations. Oftentimes, the notaire will ask for an attestation letter, and again, we're fully prepared to get this documentation prepared for you and over to your notaire upon request. I'll show you another example here. Emily, again, is buying a property in France, 500,000 euros, and I do want to just say really quickly, I know that these are fairly large numbers, but do know that we can do smaller transactions as well. Our minimum is only $250, but to have kind of some good numbers to look at, I wanted to pick a decent number here. So what I wanted to show you is really how the fluctuation can be important to you. So we had Emily looking at closing on that property in September when the rate was 117, but had she been a bit more proactive here, we potentially could have talked to Emily about locking into that rate back in just June when it was 114. And again, if she was really proactive back in February, we could have locked in at 103. So again, working with a currency specialist to navigate the complexities of how the fluctuations are going to occur and helping you to determine the best time to either lock into a rate or to pre-purchase your euros in anticipation for that future purchase. Again, just a graph. This is what the graph is going to constantly look like. There's always going to be fluctuations. Even in a downturn, you will have little spikes here and there, and you want to be fully prepared to react if the market moves in your favor. And your currency specialist is there to get in touch with you if they see the market moving in such a way. So again, we have that spot contract. A spot contract allows you to immediately purchase currency within a short period of time, help you target a rate. We can set watch orders and limit orders. And again, your currency specialist can speak to you to determine if a forward contract is what is right for you. The forward contract requires you to only put in a 10% deposit that offsets the total amount that you'll be looking to transfer, which can be fantastic, especially if perhaps your dollars are still tied up in an asset. You need to sell a property, but you don't want to lose out on the current rate of exchange. Perhaps your funds are held in high interest savings accounts. Again, you can leave the 90% in whatever investment accounts you have, but secure a rate and only put in that 10% deposit. People often ask what impacts the exchange rate, and there's really not many wrong answers to this question, but there's lots and lots of factors. And rather than our clients relying on constantly watching the news, not only in their home country, but also understanding how the economy is performing in the country that they're looking to go to, this is where the currency specialist comes into play. So they are keeping an eye on interest rates, political stability, government debt, inflation, and kind of helping to collate all of that data to help you make a more a better decision on what you want to do with your money. So the experts are there to guide you through that. What we do know, I've been with Moneycorp now for 20 years, and what I can tell you is 20 years ago, I was working with a lot of foreign nationals buying real estate here in the States. Nowadays, we're working with Americans that are buying abroad more than ever. There's obviously lots and lots of reasons why people are going. There's various golden visa programs out there. You've got digital nomads, you've got lifestyle, reduced taxes, and so on and so forth. So I'm so pleased that you're all here today to learn about some best practices to hopefully help you to enjoy this journey that you're on. I want to share my contact information with you. The team and I are on hand to schedule calls with you. We can do video conference calls. Please feel free to email me. That phone number down there is my personal cell phone number that I'm sharing. I know that's brave, but genuinely, we truly want to speak to you and answer any questions that you might have. I'm going to throw a QR code up here in a second. You can actually go directly to our website and set up an account right away. And then tomorrow, I'd be able to introduce you to a currency specialist. Or again, feel free to reach out to me, and I'd be happy to answer your questions up front or share that registration link for you at that time. But thank you so much for having me, and I'd be happy to answer a couple questions if you have any for me.
Thank you, Kelly. Good to know that we can save so much instead of using the banks. There were a few questions regarding Wise. How is Moneycorp different or better than other companies like Wise?
I think Wise serves a great purpose, and I think Wise is very useful for clients that are looking to send small amounts of money. To me, it's more of like the Venmo or Cash App type service for international transfers, right? So if you're looking to send a couple $100 to a friend or a family member, that could be a useful service. It's app-based. So what you're not going to necessarily get is expert guidance, the ability to target a rate. And you're not going to have a human being to sort of speak to discuss your international payment needs and to hopefully get some expert guidance along the way. So I'd say that's the biggest difference, is actually a conversation and an ongoing ability to build a relationship with someone who's looking out for your best interest. There may be some limitations to what you can do through Wise. I'm not entirely sure. Customers have explained to us that there were some limits when they were buying a property. Maybe there was a maximum to the amount that they could transfer. Again, Moneycorp does have a minimum $250, but there is no maximum. So again, whether you're a private individual or a corporation that has, hundreds of millions of dollars worth of transactions, there's no limit to the amount that Moneycorp can exchange.
Got it. So if you want a Kelly, you need to go with Moneycorp. And then the next question is, how do I make a large currency exchange once I am in France from a U.S. bank without being present in the U.S. bank? My bank requires me to be present to wire money. The amount would be for a purchase or a vehicle or a home, so large amounts.
That's a great question. And it's actually one of the most common mistakes that we see people make. They have their money in a U.S. bank. They leave the U.S., they're now in France, and they go to contact their local U.S. bank to facilitate a large transaction. And yes, the U.S. Patriot Act states that you're unable to facilitate an international transfer without being physically present in your bank. So it can create some nightmares if you're not prepared. So there's a couple of things that you should consider. transferring money through Moneycorp means you're taking the international component out of this altogether. So you would be sending US dollars from your American bank account into your Moneycorp account. So the fact that it's a domestic transfer could eliminate or at least alleviate that pain point for you. The other thing to mention is we see clients oftentimes pre-fund their Moneycorp account, right? So people are going on scouting trips. They're going to go to France and look for properties. Their hope is that they find one and they want to be able to access their cash while they're abroad. So again, people may choose to pre-fund and have a balance in their Moneycorp account. So again, it's a phone call away to speak to their currency dealer, convert those funds to euros, and have them delivered to wherever they need to be. You can also proactively convert them into euros. So again, they're ready to be sent. And you always have access to your account online at Moneycorp as well. So if you go, I don't need to speak to my currency specialist, I've got this, I can handle it on my own, then by all means, you would be able to log into your account from wherever you are to access your funds as you need them.
Perfect. Thank you, Kelly. We all feel much better prepared to handle our international money transfers. Thank you so much. And next, we will move over to Allison Lounes with your Franceformation. Allison, over to you.
All right. Hello. So now that you have been dreaming about the Paris property that you're going to buy, you're going to need a way to go to live in it. And so the next topic we're going to cover is French visas, your visa options for moving to France. Now, this is a huge topic. It's a lot to cover in 10 minutes, so I'm just going to be able to give you the overview right now. We have written a 462-page book this is the 5th edition that we've published. We revise it every year, all about all of the different visa types, the vocabulary you need to know, why you might want to choose one visa type over the other. I can't get into all of that now, so I'm just going to give you an overview of like what the categories are and what factors you're going to consider in terms of looking at the different visa types that are available. So my name is Allison Lounes. I have been doing relocation services for a little over 10 years. Your Franceformation is 5 years old. We offer comprehensive relocation packages. Our goal is to help you get all of your French admin right, help you get the right visa so that you are creating a successful and sustainable life in France. That you're not only moving to France with the right visa, but you're doing all of the things that you need to do to transfer your personal interests over to France, which is one of the criteria for sort of establishing long-term residence and ensuring that you can stay in the long term. There's a ton of admin to do during your first year. Getting the visa is only the beginning of a very long process of moving to France. I do want to say, too, that in terms of the property purchase, you do not have to own property to move to France. It doesn't really impact your visa in any kind of way. We often have people move, while they're looking to buy property, but they don't have any place that they've purchased yet. It doesn't really make a difference in terms of the relocation timeline. So, you can be doing the preparation for your visa process and moving sort of at the same time or totally independently of whether or not you plan to purchase property in France. So it's really important to make sure that you get the right visa and that your visa aligns with your long-term plans to living in France. Not all visa types are going to lead to a multi-year residence card, a multi-year card, a 10-year residence card. Not all visa types are going to enable you to naturalize. So one of the things that's really important to consider is, what visa types are going to enable you to stay long-term if that's what you want, enable you to do the type of work that you want to do if you still want to have some type of professional activity while you're living in France. And just making sure that whatever visa type you get, you're going to be able to have a path to staying long-term if that's what you want. I also want to point out that there's really been an increase in scrutiny on renewals, especially for people on non-working visa types. So it's more important than ever that you are looking at what visa is going to enable you to do, whatever professional activity you might be wanting to do. There's no such thing as a digital nomad visa for France. You are not allowed to work on a visitor visa. Anyone who tells you otherwise, ask them if they're going to pay your tax bill when you get caught. because that is a nightmare. It's important to know if you don't live in France, you have to follow the 90 out of 180 day rule to travel in the Schengen area. So if you buy property in Paris or anywhere in France and you do not have a long-term visa, the maximum amount of time you're going to be able to spend at any one time without applying for a visa is going to be 90 days. This past Sunday, October 12th, the entry-exit system went into effect. So now you are being digitally tracked when you enter and leave the European Union. They're going to keep track of people who are overstaying. It can cause you to be fined, to be banned from the EU. They're really not playing around anymore with people who might be overstaying. So it's really important to just be aware of your travel dates. And you can look up a Schengen calculator if you want to put in your travel dates and understand like what your limits are in terms of how much time you're allowed to spend in the EU. It's not generally possible to live in France full-time and to be a tax resident elsewhere. One of the criteria for maintaining your visa status and being able to renew your visa is that you're spending the majority of your time in France, that you're spending at least more than 6 months in France per year, or if you have a 1-year card, residence card, that you are spending virtually all of your time in France. Not all of your time, you can travel, but there's no such thing as, being in France all the time and not having a visa, not being a tax resident, etc. So if you don't want to be a tax resident of France, that's something to talk to Alex about. He's going to be the next presentation, and to understand what the limits are going to be. We're going to go through and talk about the main sort of visa categories that we can anticipate. There's visitor visas, which is for if you're retired. Options for working remotely legitimately. There is no digital nomad visa, but there are options to get set up to do so legitimately, pay all the taxes that you need to pay, make sure you have the right visa type and that you're going to have a path to long-term residency. A lot of those or several of those are going to be self-employment options. So there are visas for being self-employed or owning a business in France that will give you a lot of advantages compared to some other visa types. There are specific visas if you are the spouse or the family member of a French citizen or an EU citizen. So we'll talk briefly about that. At the end, if we have time, we will talk about salaried visa options if you want to look for a job in France. It's really difficult to get sponsored by a French company, and I'll explain why when we get to that section. But this is going to be sort of your least likely option for being able to relocate and having a path to long-term residency. So for people who don't work, who have no intention of working, you can apply for a visitor visa. A visitor visa is a 12-month renewable visa that allows you to relocate to France, spend the majority of your time here, get on the French healthcare system, exchange your driver's license, set up a French bank account, live in your French home, all of those things. And it's going to be renewable annually, pretty much indefinitely. So this is an option either if you're receiving a pension. If you're not receiving a pension and you're under retirement age, you can still get a visitor visa. Typically, that's going to be, you're living off of your financial resources, your savings, your rental income, interest, dividends, cash resources, any of those things. And the prefecture now is increasingly requesting that people provide documentation to show when they're in that situation, not retired, and living off financial resources, that they're proving where the income is coming from. Because, as I said, there have been so many people who have been sort of working remotely in France, but not really declaring it anywhere, not doing things correctly. And the prefecture is really looking out for those cases now for people who are not retirement age. If you are younger, and you might be in the middle of, if you're in your 30s or 40s, they're going to potentially only give you a non-renewable visa because they're going to expect that at some point you're going to want to return to, your home country so that you're able to work. And getting a visitor visa does not enable you to get sponsored for any type of job or be able to work more easily. There are a couple of options for working remotely legitimately. If you're an employee of a company, the company can sponsor you to go to France for a period of up to 3 years, which is not renewable. And that would keep you on a work contract in your home country. There's salarié en mission. If your company sends you to France and you're working in a local French contract for a period of up to 3 years, again, that's going to be, or in this case, it's going to be renewable. You're going to be paying social charges and everything into the French system. There's portage salarial, which is sort of like a middleman company for if you have an employer or a lot of clients that are outside of France. The middleman company acts as your employer, and if your salary is high enough, you can sort of sponsor yourself so that you're able to be working as a salaried employee in France, working for this middleman company that collects payments on behalf of, or from your employer, and then pays your social charges and sort of manages all of the admin side of you being employed in France. The final option, which is what a lot of our clients do, is creating a company or self-employment activity so that you're able to have a French entity and invoice clients in France and Europe or all over the world. The options for that are going to be profession libérale, which is being self-employed basically in your own name. You're typically going to have the status of micro-entrepreneur, which means you're earning up to about 77,700 euros per year. It's a very simplified accounting system. It's pay as you go. You're paying about 26% off the top in social charges on your gross income. You're not able to deduct expenses on this business type, but it's a really good way to sort of get your foot in the door. The requirement is that you're earning French minimum wage, which is currently 1,802 euros per month. And so it's really not a very high barrier to entry, especially if you compare it to things like Spain's digital nomad visa, which requires, I think, over $4,000 of monthly income in order to get that. Passeport Talent Création d'Entreprise, which is actually now just called Cap Talent Création d'Entreprise. This is for if you're setting up a French company. You are going to, in this case, invest 30,000 euros in the startup capital of your company. So that's money that you put in escrow, potentially using Moneycorp, that is going to then become the funds for your business project when you arrive in France with your visa and open your activity. You're also going to need to have either 5 years of professional experience or a master's degree. Now, there's a couple advantages to, going this way. One is you can potentially have a longer carte de séjour when you first arrive in France. You can get 1 to 4 years on your initial carte de séjour rather than just 12 months on the profession libérale. Your spouse can work if you have a talent, if you have any kind of talent card. And also there's no limit in terms of your company can earn as much as it wants. You can deduct expenses. It is more complex and has more expenses associated with this. But we have a lot of clients opt for it because of its flexibility. If you're a visual or performing artist, there's also an artistic profession talent card, which allows you to do different types of work contracts as long as they're all tied to your artistic activity. So you can have a salaried work component, a self-employed work component, an artistic production, sale of your artistic works component, as long as everything ties into your project. We already talked a little bit about portage salarial, but the way that you can use it would be to qualify for a talent card as a highly qualified employee, a salarié hautement qualifié, which is called a European Blue Card. The salary requirement for that is 59,373 euros per year in 2025, may go up slightly in 2026. That puts you in the top 95, it's about the 95th percentile of French salaried employees. So it's quite high for French salaries, but for an American employer, it might not be a huge barrier for that amount. If you're the spouse of a French citizen, you're going to have a very advantageous visa status. You would apply for a private and family life visa, vie privée familiale, in your home country before arriving in France. If you're the spouse of an EU citizen who is not French, you're not going to apply for a visa before you arrive. You're going to arrive in France and apply for a carte de séjour within 90 days of arrival. And in that case, your EU citizen spouse has to be exercising their EU treaty right to free movement. That means that either they're employed or self-employed, earning at least French minimum wage, and you're able to show that, or you have sufficient financial resources that, you don't need to work, at least for the first few months. And then the family needs to be covered by private healthcare until you get into the French healthcare system. If you have an EU passport, of course, none of this applies to you. You don't have to apply for any type of visa or carte de séjour. You can just up and move to France, but there is a lot of other admin that you have to do to make sure that you are actually, living in France, properly exercising your EU treaty rights, etc. I'm going to spend about 30 seconds on the salaried visa options. There's about 6 different types of salaried work visas that you can potentially qualify for. All of them require that you have a work contract before you move to France. If the salary is low and you don't have a French degree, typically you also have what's called a situation de l'emploi opposable. It means that the French government or the agency DREETS can oppose a company hiring you unless you have really special skills. So they would basically have to prove, the company would basically have to prove that they tried to find somebody to do this job. They couldn't find anybody else who already had the ability to work in France. And so because of that, they're able to, or looking to hire you. If you have a French master's degree, if you have a 2-year French master's degree, you can get a job seeker visa and then more easily transition to one of these salaried work visas. So getting a master's can potentially be a way into the French job market if you have a couple of years to go back to school and then look for a job before, and can support yourself doing those things. What we do is we provide consultations and relocation packages. So we are working with people typically about 4 to 12 months before they want to arrive in France with their visa. More on the 9 to 12 month side if you're starting a business, more on the 3 to 4 month side if you're going to be retired or a family member of an EU or French citizen. We help people to, develop a timeline, select the right visa type. There are about 30 visa types. We didn't go into detail in every single one. But that's something we typically discuss in these consultations, why you might choose one over the other, what your options and your long-term paths to staying in France are going to be depending on what you pick. We have books like Foolproof French Visas. I'm going to give you a link in the chat, which has a link to look at Foolproof French Visas. We have a free Q&A at the beginning of every month to answer questions about visa types and the work that we do. And typically you want to be asking these questions and going to these types of webinars, for several months before you're even ready to start taking action. So I will go ahead and give you a link in the chat. And then if you want to check out the book, there's a QR code right there. Thank you.
Thank you so much, Allison. Lots of different legal paths to get us to France. So thank you so much for all of that information. I know it's hard to condense in such a small period of time. You have a lot of questions for you, so I'll do my best to pick out a few, but a friendly reminder to all of our panelists, if you can take the time to reply in the Q&A and answer any questions that apply to you and our attendees. I hope you can look back and find those answers if we can't cover it online. One of the questions for you, Allison, is what family member relationships are considered for the spouse and family visa? Example, my son is French, as are his children. If he lived there, would I qualify?
If your son is an adult, no. Well, I mean, there is a way for your son to move you over as like an ascendant. to be basically a dependent adult, but it would be very similar to a visitor visa. So you would really only go for that if you didn't have the resources on your own to get a visitor visa for being retired in France. If your son is if you have a child who is a minor who is a French or EU citizen, that can also give you a path to getting a carte de séjour that enables you to work. If you're the parent of a French minor child, for example, let's say you're not with the other parent anymore for various reasons, but you have authorization to move the child to France, you would get a visitor visa or some other visa type for 1 year. After 12 months of your child residing regularly in France, going to school in France, and you financially supporting them while they're living in France, that would entitle you to a private and family life visa. And similarly, for an EU citizen child, it would work very similar to an EU citizen spouse.
Okay, thank you for that. And then one more question for you. Does the 6-month minimum in France have to be continuous months, or can it be spread across the year?
It can be spread across the year. The one thing I really caution you is that if you plan on actually setting up a life in France, there is a lot of admin to do in the first year, like a lot. And if you're not spending enough time in France, you're going to have a real hard time getting everything done that you need to do. And it's going to be very difficult to make sure you get everything done before it's time to start renewing your visa. Because your visa renewal is, if you have a 12-month visa, you're going to need to start the renewal process or submit your renewal 2 to 4 months before your visa expires, which means we send out renewal reminders 5 months before your visa expires. You've only been in France like 6, maybe 7 months at that time. So it's really quick to start getting a lot of the admin done.
That's really helpful. Thank you so much, Allison. It was a great presentation. Thanks for all the information. And we are on to our final speaker. We have Alex Ingrim with Liberty Atlantic Advisors. Hi, Alex. Over to you.
So just to give everyone an idea of what we do, we're a wealth management firm that helps Americans that are moving to Europe with their financial planning. So we're specifically focusing on science today. And so again, this is going to be kind of a broad strokes presentation. It's a very dense topic. So we're not going to be able to answer very specific questions today, but this is just to give you a broad flavor of what financial planning obstacles there are in France and what you should be doing before you move, or what you should be thinking about as you're moving to France. So the first piece, and we've gotten plenty of questions about this, is just what indicates having tax residency in a country, and specifically France and the US. So they operate different tax regimes. The US has a citizenship-based tax regime. So if you're a US citizen or a green card holder, you're going to be liable to file for US taxes on your worldwide income and asset base. So we hear a lot, Americans are always liable to file taxes wherever they live in the world. What that means is you always have to play by the US rules. You have to play by the IRS's rules, regardless of where you live in the world. For French tax residency, it's determined by how much time you spend in France. So if you spend more than 183 days of a calendar year in France, you're French tax resident, but also it can be determined by the center of your economic or family interests, or the place of your main abode. Meaning if you have a place to live in France, but you don't really have any other center or place to live anywhere else in the world, it can be determined that France is your country of tax residency. So 2 different systems, and the implication is that you can be tax resident in both systems. And essentially where you pay taxes, or which country you pay taxes to, gets intermediated by the US-French double taxation agreement. So we like to think of this as an agreement that governs which country gets to tax your income streams first. That's kind of the real key, is it's an agreement for each country to provide clarity to the tax agencies on who's taxing what and how. But the key is that you have to play by both sets of tax rules. So life for Americans in France is considerably different than for other nationalities. So a lot of the stuff that you read online about France being a horrible tax jurisdiction or the taxes being onerous and high, it isn't really as applicable to Americans because the US-French double taxation agreement is highly favorable for Americans. It's really unique. That's something that's very important to understand. This agreement is not like any of the others. If you were in the UK, if you were in Spain, if you were in Italy, all the countries that surround France, you don't get the same benefits. So what makes it really unique is if you're a retiree, US retirement accounts, so like a 401k or an IRA, even things like 403bs or 457s, and social security distributions, so your social security income, are very tax efficient because the treaty dictates that they're going to be taxed by the US at federal income tax rates. And you will just get a corresponding French tax credit that eliminates your French tax liability on those income streams. So you pay taxes to the US instead of France on retirement accounts and retirement income that was derived from work in the US. Likewise, US domiciled investments. So think about things that are invested in the US. So investments in US bonds, investments in US stocks. Those benefit from the treaty as well because they will be taxed by the US at the US capital gains tax rate, which for most people, federal capital gains tax rates are 15%. Compare that to France, where capital gains tax rates, the single rate is 30%. So there's some pretty significant tax efficiencies there for Americans too. And then one of the really cool things, and this really isn't applicable to most other countries, US-based planning remains effective. So Roth IRAs are still tax-free. So a lot of the stuff that you've done throughout your career to build up retirement accounts or an asset base or just to retire early remain relevant in France after you move. So what's some of the bad news? Well, estate taxes are very high and start at a low point. You need to think about when you're thinking through estate taxes that it's more of a succession tax instead of an estate tax. And what that means is the implication is the tax rate is derived from your relationship with the person that's inheriting from you. So it's not like the US where it's the person that passes away, it's their estate, it's how big it is, it's where they live. No, it's actually about your relationship with your beneficiary. And that's going to determine some of the tax rate. Trust-based planning just does not work as well as it does in the US. Trusts are a common law concept. France is a very distinct legal system that is not common law like the UK and the US. So that's something that you have to really be aware of. You're entering into a different legal system where trusts aren't recognized that well. You're going to have wealth tax on property holdings. That's something that's come up already. So property holdings where your equity amount is over 1.3 million euros. It depends on whether you're tax resident or not, whether the property is in France or not. So these are very specific situations, but you just need to be aware that property holdings might not be as tax efficient as financial investments in France, particularly if you have like a big commercial property portfolio. That's what we've seen in the past. That can be troublesome. You definitely need to talk to a tax lawyer. And there's just higher income tax rates. So that's something to be aware of as well. There is a US-France estate tax treaty. So a lot of this gets alleviated through that treaty. But you really need to talk to a specialized estate planning lawyer in order to work through that. So just a few complications that we've seen arise over the years. So it's really important to evaluate your access to the U.S. financial system, since you're going to be paying taxes in the U.S. primarily if you have the U.S. investments or U.S. retirement income. It's important to have U.S. bank accounts from which to pay those taxes. Also, you need to make sure that the assets you need to leave in the U.S., so retirement accounts, IRAs, 401ks, need to stay in the U.S. You need to make sure that your custodian is okay with you living abroad. So one thing we say is to kind of try it out, give them a call, tell Fidelity or Schwab or whoever you work with, you're thinking about spending some time in Europe, and see what they come back with. It's really important to be aware that local investment products in France, things like an assurance vie, things like French mutual funds, French ETFs, they're not US tax compliant. So you're going to run into a pretty sizable US tax bill if you want to exchange all your money into euros and start investing into French ETFs or mutual funds or assurance vies. Like, local French tax planning usually doesn't take into account that Americans have a dual tax liability. So it's really important to just acknowledge that. So what should you do if you're moving? Speak to a tax lawyer. We are not tax lawyers. We are not tax advisors. So definitely speak to a French tax lawyer. You know, tell them when you have trusts, tell them about the estate planning that you've done. The double taxation agreement, you know, it incentivizes you to keep money in the US. So that is typically what we advise people to do. And, you know, review your US tax filing strategy. There's different things that arise when you live abroad. There are different tax filing strategies or methods that you need to employ or make decisions about when you live abroad. So it's really, you know, important to hire a CPA that understands what it means to be an American living abroad. I think that's kind of key to everything. And that is it for me.
Thank you, Alex. So you're saying we can't avoid tax, but it's not as bad as some people make it out to be.
Pretty much, yeah. France is, if you're American, France is probably one of the easiest places to move tax-wise, if not the easiest.
Well, there you go. You could have just said that.
I should have,
Thank you so much. That was really good information. There is a question for you. Is there a possibility that the taxation agreement could be eliminated in the future? And what would that mean to a U.S. retiree who has been living in France?
So it's unlikely that the agreement will be eliminated. You have to remember these take years to negotiate. Each country has other priorities at the moment, particularly fiscally. The US has eliminated double taxation agreements, but it's when they're really upset with another country, and that's definitely not the case now. The biggest risk is actually if the US does away with citizenship-based taxation, because then it would have to renegotiate all of its treaties. So that's actually the biggest risk that the tax community is looking at right now.
Got it. Okay. And one more question for you. How about military pension and VA disability? My VA is not taxable and I pay US taxes even while living in the UK.
Yeah, I mean, that's pretty standard in most of the treaties, is that when you've done any federal service or government service, you get taxed according to US rules.
Perfect. Thank you so much, Alex. We have so many good questions. Thank you to all the attendees for keeping those coming. I will go through and ask our panelists a few more questions. I am mindful of time. We are running much longer than we expected, but hopefully they're answering your questions in the Q&A. And again, the recording of the webinar will be sent to everyone tomorrow. But Miranda, back to you. There were several questions about the fractional ownership. Can you expand a little bit more on that?
I'm happy to. Yeah, fractional ownership is a structure of a group of people owning a property together. The usual structure is anywhere from 8 to 13 owners, but we've syndicated a couple of properties for individuals who kind of came with the group they already wanted to do it with, and put that together for them. And basically you buy an apartment and it's renovated and furnished and managed and taken care of, and you own a percentage of it, which translates into a certain amount of time that you get to use it during the year. And it can be really, the model can be anything you want. So it can be, I own, these months and you own these months. It can be 2-week time periods. Some are variable, some are fixed throughout the year. Really depends on kind of the model and the setup. But most of them, the ones we work with have a U.S. company component of ownership. So it's pretty familiar. When you're selling it, you're actually selling shares in a U.S. entity, which kind of makes it a little bit more familiar for people. And otherwise, the property is managed and fully taken care of. And it's just a nice way to kind of get into a Paris property really for a price you wouldn't otherwise really find anything. So, yeah.
Fantastic. Thank you so much, Miranda. I'm going to jump over to Tom. Tom, question for you. We are looking at purchasing a chateau that has a group of buildings that we think would be great to host weddings and retreats. What would we need to think about if we were to go and view it?
So there's a couple of things in that. So camera on over there. And it's a very interesting question, very popular. The chateau market has kind of exploded in France. Recently, we've got a few chateau projects on the go at the moment. The basic principle is that the zoning for the chateau has to be right to allow the events, the buildings to be converted into event space. Then we need to look at whether all the kind of regulations around fire safety and access and all that fun stuff can be accommodated in the structure. And then there's the kind of the heritage aspect of chateau work, which you need to consider. And the working with protected buildings in France is always interesting. You get to work with an organization called the Architectes Bâtiments de France, who are effectively the protectors of France's built heritage, and they have their say over any work that happens to protected structures and protected buildings. And so it's not a totally simple process, but not completely beyond what is possible. You just have to kind of approach it with a sensible strategy.
Perfect. Thank you so much. I'm jumping over to our next presenter, Thomas. One of the questions for you was, are the loans structured as interest only or principal and interest? You might have already answered it, but just to let everyone know.
Yeah, so we commonly in France, it's an amortizable loan where you repay both capital and interest. Still, we are able to source interest-only loans. So this is not available for below a certain amount, but we are able to provide those with 10 years term.
Perfect. Thank you. And question for Kelly. I actually lost the actual question because there's so many coming through, but the question for you was to do with forward contracts and what were to happen should the exchange rate move either in their favor or against them while they're in that forward contract.
So I think the idea of the forward contract provides a great setting for a conversation, but a forward contract is certainly not right for everyone. And although a forward contract does allow you to lock into an exchange rate for up to 2 years, I think it's important to communicate that the reality is most clients are probably doing a forward contract for more around maybe 2 to 3 months, because most people don't actually know what they're doing in 2 years' time, right? So just wanted to outline that first and foremost. But once you do enter into a forward contract, you are locked into that rate of exchange that you are agreeing on that date. And the reason being is that Moneycorp is not taking a risk in saying that, okay, fine, we're going to promise you today's rate, even though you don't want to convert your currency for a year's time. Moneycorp actually purchases the total amount of euros that you're looking to buy at today's rate of exchange. So it's almost like Moneycorp provides you with a line of credit. We're going to buy 100% of the euros that you're ultimately going to want to purchase today at the current exchange rate. You are only going to give us a 10% deposit. And then again, at that future date, you'd send in the balance. So this is why we can't move the rate of exchange once you're locked in, because the reality is we've already purchased the currency. But again, forward contract's not right for everyone. Forward contract is fantastic if we see the rate has kind of hit a peak and we believe that it's going to start to move against you. That's one thing. And we also see people do forward contracts if they're working on a really tight budget, right? If you go, oh my gosh, if the rate, I'm losing sleep at night because if the rate moves just a little bit more against me, I'm going to have to cancel my plans to go to France. Well, then let's talk about a forward contract and help you sleep better at night.
Thank you, Kelly. I'll jump over to a question for Allison. Allison, I understand the visitor's visa for retirees is no longer a path to naturalization. Is there a possibility that after purchasing a home, we may be denied a 5-year extension, or does this not happen often?
Okay, so the first thing is that I'd like to point out that this is not new, and the visitor visa has never been a good option for a long-term path to residency. partly because of the tax issues. You're typically, if you're an American citizen and you're retired, as Alex explained, you're not paying much in the way of taxes on your U.S. source income. You're paying very little into the healthcare system. We're writing the 6th edition of Foolproof French Visas. The first one came out in 2019, and it's been in every single edition that if you want a long-term path to citizenship, visitor visa is not the way to go. You want to be paying it. You want to be working and paying into the system. Now, that being said, a visitor visa is a 12-month visa. It renews annually for 1 year. There is no limitation on the amount of times that you're going to be able to renew it. So you can renew it indefinitely. The process is done online. The main thing that you have to do in person is go to pick up your card. So it's not particularly difficult or onerous in terms of administrative procedures to continue to renew it every year. And there's no reason that you can't do it. There's also, I'm not sure where the 5-year extension comes from. But there's not a 5-year carte de séjour for Americans. There was the 5-year withdrawal agreement card for British citizens who were living in France before the end of 2020, but there's no 5-year carte de séjour. So.
Perfect. Thank you so much, Allison. And really, that's all the time we have for today. We could have gone longer. We already did go longer, but thank you so much for sticking it out with us. A huge thank you to all of our brilliant panelists. Thank you for sharing your knowledge and your time with us. So a round of applause for all of you. And all of our attendees, you will receive a recording of the webinar tomorrow in your inbox. So look out for that. Thank you so much again, and bonne chance on your next French adventure.